helped a lot. The ethylene cost has come down, and our upstream integration strategy, which is from, with ethane to PET and mixalin to PET, you capture the whole value chain in the business. So that is the special positions. The encouraging note this quarter has been also Asia. In Asia, our return on capital employed has gone into double digit after 5 years of continuous low returns. As you know, the PTA business has been very bad in Asia. Still, there is not much improvement in the Asian PTA margin. It's a very marginal improvement. But this return on capital employed has come because of our strategic moves, like converting the Rayong plant in Thailand to more specialties, particularly in the high value added. As we had the IPs, we transferred that knowledge here. All our customers like Procter & Gamble and Kimberly-Clark were looking for investment in this part of the world, and that's how you migrated the technology here. Similarly, better capacity utilization, and as the industry is getting more rationalized, particularly in the PTA in Korea and China, we hope that the PTA margins will improve. Our company continues to have high degree of corporate governance. We have, all the independent directors, which adds a lot of, the day-to-day values. We won the award for the transparency, as you might have reported. So, company follows the sustainability corporate governance at the heart of the company. And this has been the success story for IVL. Today, IVL is actually very diversified. And if you look at the earning streams come from different businesses, and which helps in the visibility of the earning. This shows you how the black line, how the return on capital employed is changing. The IVL return on capital employed, as you can see, the 9.9%, and the return on equity has gone up to 12.3%. Of course, return on equity, as you know, you have retained earning, will keep, as the equity base goes up, then it will come down. But as you can see, 12.3% has become the return on equity, and ROCE has improved to 9.9% in 9 months of 16, while in the particular this quarter it has been much higher. So the IVL value chain, which it defines, particularly as you can see the green where we are, or we are likely to be, with the ethane plant. As you know, the cracker business is quite attractive at present. As you know, the petrochemical results of companies even in Thailand, Siam Cement Group, has been giving very good results. So cracker margins remain strong, but this is a ethane based cracker which gives lower cost, and this is being debottlenecked, so which is 450,000, which will start in fourth quarter of 17. So basically we are buying ethylene at present for our glycol plant in North America. We'll get upstream integration. So this is an integration from ethylene right up to, as you can see, polyester fiber and PET. We are not in refinery business. We don't want to be in refinery business because refinery is quite volatile. And now we went into paraxylene, the acquisition of BP assets. So from mixalin, you can go up to PET. Similarly, a unique product which we bought is IPA in Cepsa, Spain, the only producer of IPA in Europe. IPA goes for PET as well as for other specialties like coating and paintings. And this is a very good high value added product. And here the metaxylene is the driver. So metaxylene we tied up with Cepsa as a part of acquisition, and the increased capacity of metaxylene will come in 2018 onwards, so which will add further grow this business. So from metaxylene to IPA, and on the right hand side you can see in polypropylene fibers and nylon. We are not in the polypropylene or other businesses. So there are still a lot of fill in blanks where it gives the opportunity to expand the business. We will continue to look at all those acquisition opportunities or growth opportunities. It is always a decision between make or buy, that whether I make or buy as I am controlling the end product. So this is the on track, whatever we thought in 2018. Today all the projects are committed to major Rotterdam expansion, which will start in June of next year, and the cracker, which will start in fourth quarter of 17. Next slide. So I think the performance is driven more because of integration, because once you send that product, you sell the entire value chain. North America is very attractive, and that translates into the bottom line. This slide shows you the increased value addition. Now what exactly is happening, that in 2014 value addition means how much percentage of the sales you are value adding it. So as you do integration, the value addition continues to increase. Today, like we are 38% from continuously with upstream integration. This has been going up with the HVA product line from 27 to 38%, and based on our expansion strategy of Rotterdam and cracker, it will go to 44%. And then you can see various components which are contributing to this value addition. So all these colors show you that what different product lines which we are in. So actually PTA also Asia is different, Europe is different, America is different. So don't assume this as one, but they are all different, so that you can see what diversified product base which we have, like we PET Asia, Europe. Oh. Wait. Is that screen probably not working?
No, I don't know what the problem is, but they said they're going to try to fix it now. No, it's just that when you refer to the side, it can't see what it's on.
Yeah. Sorry, I didn't know.
Yeah,
Yeah, because normally you don't see on the back side.
Let's just wait for a minute so that they can fix it, and then we'll start on that again.
I'm sure they can fix it. Maybe the computer problem. Yeah.
ปรับนั้นได้เอามุนก็ได้ให้ทุกท่านดูเพราะว่าเรามีทีอยู่แล้วไม่เป็นไรก็ให้ทุกท่านดูใช่ครับ
Okay, I think we can do that.
Yeah, that's easy enough.
So we were talking about this slide which gives you the value addition. As you know, the value addition is what value addition we do over the turnover. It's about 38%, which is going to go up to 44% because of the cracker which we are building up, the Rotterdam expansion. It doesn't add the turnover, but actually adds the value addition. And that's why it translated into EBITDA margin of 11% in 2018-16, and we continue to focus to improve this EBITDA margin as the value addition goes up. And you can see that there is a lot of diversified, all these colors show you different value additions. So red shows right in the bottom is PET Asia, PET Europe, and all these are different because in different markets, the value additions are different. So it has a highly diversified product base. This shows you the history of IVL. As I always say, it's easy to acquire the assets, but very difficult to integrate. IVL has created a track record of successful acquisitions and integrating them with our existing businesses. We integrated 2 large businesses this year, Cepsa Spain as well as BP Decatur. And you can see the volume growth, the IVL production growth in 2005 is 7 million tons, and last 12 months is 8.12 million tons, which is a compound average growth rate of 12%. Now this compound average growth rate of 12% has translated into the EBITDA. As you know, the 2012 was 14.3. I mean, we haven't put 2011 because 2011 was a good earning when the PTA was at the peak. So 12, 13, 14. So weighted on this particular, poor PTA spreads. So last 12 months ending third quarter is 25.5. But actually, if you know that the acquisitions, only 2 quarters have been added. So last second quarter, our EBITDA was 7.7. Third quarter was 7.5. So it totally amounts to 30 million annualized basis. Now this is in spite of very poor MEG margins. The net profit after NCI has significantly improved, 4.9 billion in 2014, 6.5 billion, and now you can see 8.9 billion in last 12 months ending third quarter 16, and which has translated into the earning per share of 1.7 baht in last 12 months of third quarter 16, which is a growth of 56%. So you can see that this is all getting translated into the bottom line. The vertical integration, the product diversity, and in spite of euro weakness, And we are very excited. I mean, there may be a question about what has happened if the Trump's election in the United States. Well, Trump has, as you know, is more protective measures he can take if it takes, like NAFTA trade treaty, free trade agreement with Korea. Now that means that more duty protection will come. He's talking of punitive duties on China, about 30 to 40%. This means North America business growth rate will improve, the margins will improve. Because most of our, as you know, in the United States, whatever we produce, we sell in the United States. So we have our ethylene cracker in the US, we will have our paraxylene plant. So all that is based in the US. So that will benefit and the further corporate tax reduction. He's talking of corporate tax reduction, and if the corporate tax reduction is done, this means earning per share improves in United States. So it's overall positive, the Trump election results. These are the strategic completed acquisition, the two acquisitions, which is BP sold the assets in Decatur. You know that we have a large PET plant there, and we were getting the PTA by pipeline. BP decided to sell their business in Decatur. We bought these assets, which has a paraxylene and PTA and a unique product, NDC. NDC, we are the only producer. The NDC, there are very high-end applications. It's sold at very high prices. You can see the iPhone screens. So our customers are like 3M, Teijin. So all this goes for those specific. This product was not well attended by BP, and now we are finding very synergies, because NDC is used in tire cords, heavy duty tire cords like aircraft tires or even heavy duty tires. Similarly, NDC can be used for packaging. So we are going to leverage this NDC into our group's packaging business. And of course, it will take some time as we have our own R&D. Similarly, acquisition of Cepsa, Spain. This gave us a footprint for PTA, PET in south of Europe, and also a unique product, IPA. And as I just mentioned earlier, that we have tied up the metaxylene, extra metaxylene. The IPA business is driven by metaxylene. So that is again a successful acquisition. Both this acquisition has been very well integrated with IVL management, and we got a lot of management talent with it. So we are very excited about this two acquisitions, which has actually improved our profitability in last 2 quarters. And in spite of very poor margins in glycol, if you are following up, the glycol margins significantly drop. So any drop in the UAG earning was compensated by these two acquisitions, and now we are seeing some improvement in the glycol margin as we move in the 4th quarter. This slide shows you that how the operating cash flow is improving with the EBITDA. Now, what it means that, you know, when you look at earning per share, there are a lot of non-cash items in that, particularly deferred tax. You have a lot of release of working capital when you integrate. So the backdrop shows you that how the operating cash flows are improving and how they are linked to the EBITDA. So operating cash flow is very close to EBITDA. Now this happens because our tax burden is low, our working capital releases are good. So how does, in spite of today with 2 acquisitions, our debt is 2.9 billion or 2.7 million US, we will be throwing very strong cash flows in next 3 years, and that will deleverage the company and make a good position for further growth in the business. So that gives you also different that 2012 portfolios, what is that red line shows you, and then you see 2013 projects, then you see the 2014 projects. So each of the acquisition or the new projects has added the bottom line, and you can see that how what we are visualizing for 2018, we can't give you the figures, but naturally they are all committed projects. Number 1 is your Rotterdam expansion, which is going to start from June next year. The cracker, which is going to add at least $110 to $120 million of EBITDA. Rotterdam will add up another, and then the operating rates will continue to improve. So these are all based on existing committed projects. So that's on the business strategy. Now I will tell Vikas to cover the financial performance. Then I'll come back. Yeah.
Morning. You have seen that the long-term performance in the strategy section. So I'll take you through the financials. More short-term is the third quarter. So the company, as you can see, has delivered an outstanding performance in this quarter. This quarter actually benefited from two big strategic acquisitions, the second quarter and the third quarter. And third quarter actually a little bit more integration because second quarter we just bought it. And Cepsa Spain we bought on 7th of April. So one week of extra volume you can see in the third quarter. And then as you can see in the slide that there is a transformational change in the earning profile of the company. So when I go to the next slide, you will see the last 5 quarter performance, and you can see how the earning profile of the company has shifted in the last 5 quarters. Even in the recent quarter, the company has delivered a robust performance across all these parameters. And as I mentioned in the previous slide, you can see the second quarter and third quarter jump, which is attributable mainly to the recent acquisitions that we have done. BP Aromatics Theater in US and Cepsa in Spain. And also the operating rate in this quarter was 89%. Last quarter was 87%. So there has been an improvement in the operating rate across the board as well. The sustained performance in the third quarter 16 is achieved hitherto being a seasonally weak quarter, and the euro continued to be weak in the third quarter. So despite having a normally a seasonally weak quarter and a weaker euro, there has been a strong performance, and which is driven by better demand, the operating rates, and these two acquisitions that we have completed in the second quarter, beginning of second quarter. Moving forward, the recent performance here you can see that how the returns on capital have performed over time. So you can see the transformational shift in the earning profile of the company in this slide. You can see second quarter, third quarter, the EBITDA margin is in double digit, return on capital employed is in double digit, and return on equity is also in double digit. Following the first quarter there has been a event when our EOAG site in the US, it was down for turnaround, catalyst change, and there was an extended turnaround. So the whole of first quarter did not see the earning from the EOAG, and that impacted that quarter. Well, as Mr. Agarwal mentioned earlier, that the MEG margins have weakened in the third quarter, and it has started to improve. But as our US gas cracker starts next year in the fourth quarter, so we expected to be basically the weakness in the MEG margins is expected to get offset with the ethylene margins. So we will see our returns to further improve once we complete the gas cracker and then the Rotterdam expansion. So next year we expect these two strategic projects to start in the Rotterdam expansion in the middle of next year, and gas cracker by end of next year. The full benefit you will see in 2018. Working capital efficiency continues. So the company continues to work to find opportunities where how we can optimize on our working capital, and that has also led to some increase in the return on capital. This is more year-on-year performance for the quarter, that how the third quarter last year compared to third quarter this year. So there has been 24% growth in EBITDA. When we talk about EBITDA and all these numbers, we are talking about normalized numbers. So I'll take you through that, how these normalized numbers tie to the reported numbers in the subsequent slides. So increase in the backward integration, because these two projects we mentioned are mainly in the feedstocks in both Asian and Western markets, has resulted into a higher operating rates. And recent acquisitions have provided this absolute EBITDA growth of 24%, and also driven by increase in the operating rates. EBITDA per ton has been marginally impacted. You can see there is a marginal drop in EBITDA per ton, but that is mainly driven by the change in the mix. Because like when we say that we have increased the integration, so that has been mainly in the necessities segment. So if you see on absolute basis, then there has been an increase in fibers, in the Western feedstocks, in Asian PTA. So overall, there has been an increase, but mainly because of the product mix and weaker MEG margins and weaker euro, there has been marginal decline in the core EBITDA per ton. IVL's downstream business of PET and fibers combined are steady, and reduction in feedstock EBITDA per ton is mainly due to the blend of new PTA, which we acquired in the Western markets. When we say Western, is Europe and North America. So this is the last 12 months slide, like how the transformational journey the company has embarked has driven into outstanding performance. There has been a growth in production. Today our capacity is 10.5 million tons. Core EBITDA growth year on year is 16%, net profit 53%, and EPS 59%. EPS and net profit, the difference would be mainly because of interest perpetual debentures that company issued in 2014. So as we mentioned to you that IVL is yet to get the full benefit of the integration. We just bought these two big assets, and the management is in the process of integrating them, and we can expect some synergy benefits to come next year. We assess our performance on the core basis, as we mentioned to you, because the core performance reflect the underlying business performance. But in this slide, we show that how the core performance ties to the reported numbers. So the major differences arise from the inventory gain or losses. So as we are a global company, we carry inventories, and those inventories we need to mark to market on a monthly basis. So it depends on the crude oil pricing, where it's moving, the raw material pricing. So sometimes we have gain, sometimes we have losses. So we show it to you, and these are non-cash, because as we have a gain, then we have more working capital outflow, and we have inventory losses, then we have working capital inflow, which we saw in this quarter also, because there is an inventory loss of 114 million baht, but there has been a substantial inflow of working capital in the operating cash flow. So operating cash flow will be more similar to core performance, and will move in the similar direction. Another difference is the extraordinary items. So the major one-off item which we saw in this quarter is a 433 million baht, which you can see here. That's mainly on the refund of one of the project that we discontinued last year. So we had taken a write-off last year for the expenses, and we got the refund of certain portion of that write-off. So that is booked back in this quarter. So that has been an extraordinary item. So after normalizing all that, the company achieved a reported net profit after tax and NCI of 3.2 billion baht. So I'd request Mr. Agarwal to take you through on the business update section.
So this slide gives you last 12 months third quarter 15 bridge to last 12 months third quarter 16, from 22 billion baht to 25.5. Now I just mentioned that 25.5 does not reflect the potential. As you know, last 2 quarters we made 15.2. So if you just multiply by 2, it's about 30.4 billion baht on full, because only 6 months acquisition is counted for Cepsa Spain and Decatur. So this will become 30 billion, 30.4, and this is in spite of very low MEG margins. And as we add the cracker adds another 110 to 120 million dollars of EBITDA. Rotterdam expansion will add another 30 million euros. So if you see this bridge 22 to 25.5, PET contributed 0.8 billion, fiber, which has been with many acquisitions with improved EBITDAs, is 1.5 billion. But Western feedstock is showing only 0.2 billion, but that's because the loss due to EG is compensated by the new acquisitions, and that's why it doesn't show much increase there. And then you can see Asia improvement, a marginal improvement in PTA, primarily due to operational excellence, the margins have only improved by $4 per ton, and that adds up to 25.5. And as we were explaining you, the PET margins, as you know, the mix change, and also due to the weak euro, dropped from $84 per ton to $76 per ton in EBITDA terms, while fibers supported by high value-added businesses improved from 139 to 155. Western feedstock dropped from 170 to 89. As you know, we have much larger PTA capacity worldwide, and also the mix change. Earlier it was predominantly the PTA plus glycol, and the glycol has dropped. So, and the Asia PTA, you can see a marginal improvement from $21 per ton to 34, but primarily driven by operation excellence, lower coal prices, power. So that's how the bridge shows from 22 to 25.5. As I mentioned, even if you analyze the last 2 quarters, it becomes 30 billion, and then as the MEG margin improves and new assets gets added, the profitability will keep improving. One of the characteristics of IVL business, as you know, we have 20% market share in PET in the world. We produce where the market is, because it's not a labor intensive business, it is logistic intensive. So we have a footprint in US, we have footprint in Europe, Turkey, Asia also we have in Indonesia, Thailand, and recently we added India. Now India, we are very excited. Actually, the India is a 50-50 joint venture. This market is going to grow rapidly with 15% CAGR. The Indian consumption is significantly lower than China, and as the Indian economy pumps up, this growth will be robust. So if you look at the revenue breakup between North America, Europe and Asia, it's 32% in Europe and 29%, and there are diversified production sites of 16 sites in North America, Europe is 20 and Asia is 30. What does it mean that you get premium on domestic? So like Thailand market today is continuously growing. It's a 400,000 ton market. In 95 it was only 8,000 ton market. So when you sell domestic, you get a premium of $40 to $50 because of the you sell on import parity. Similarly in Indonesia we have the leading position. We also have in South China. So all this, and in India which is getting added. So that gives you a more premium. So even production will be limited, but the market spreads will keep improving because of the domestic premium. And the below graph shows you how the IVL PET sales has been going into Thailand and as a percentage. So domestic premium is very important. We sell domestically in Europe, we sell domestically in America, and Mexico also sells domestically with a 44% market share, as well as to the Latin American market. So domestic is a very key ingredient of the IVL sector, and which will continue to go up. And as you know, we also have a packaging business which makes preform, and in Thailand we are large, we are in Nigeria, we are in Ghana, we are in Myanmar. So that works as an integration of the PET. Having a diversified geographical portfolio is very key in every business. The business conditions keep changing around the world. You saw the PTA margins. The red line shows 2011 were huge margins, which made substantial investments in China, and then the red line shows how the PTA margins collapsed, and they actually went below cash cost. Everybody is losing money in Asia. They have started slightly moving up, as you can see in 9th month ending 2016, as industry is getting rationalized in Korea, also in Taiwan, and in spite of huge capacity addition. So there will be some upside coming up. The growth in North America is 0.2 million ton in 2008 to 3.5, and the diversified product portfolio, you can see that how diversified is PTA, PX, EO, EG, and ethylene and propylene. And 76% of our assets are based in America, and 13% is in Mexico, and Canada is 12%, which is the PTA plant. And I was just saying that because of this US election, if there is a protectionism or more duties are put in, which will immediately get translated into the spreads in those products. So North America is a very attractive market. You can see our EBITDA is 13.9 billion, which is a significant percentage of 30 million, as I was telling you, third quarter into 4 times is 30 billion, out of which 13.9, which is 43% of our EBITDA percent margin is in North America. And North America enjoys very low gas prices, low power prices, and the market is going to further grow as the GDP growth improves in that country. So North America, again, we are going to have this cracker, which is coming up in fourth quarter of 17, which will add further upstream integration. So very exciting times in North America, and diversification and integration helps us into delivering superior results in that country, in that region. Europe, another very interesting case. As you can see in Europe, what that we went into necessity business. As you can see, the red shows the necessity business, but we kept acquiring some of the important HVA businesses, and which included the Trevira, which included the Fiber Vision, and the recent acquisition of Cepsa Spain, which adds up IPA, and IPA we are the only producer of in the Europe. So that added up, and that HVA growth, and in spite of weak euro, our growth in EBITDA was from 1.1 billion to 6.6 billion, which is 28% CAGR, and production improved from 0.7 to 2.6 million tons. Again, a very diversified earning geographically. Within this, how many we have assets in Netherlands, Spain, so many countries, which again acts North Europe and South Europe are not one. You know, the North and South is different. So we, by Spanish acquisition, we created a footprint in South Europe, and PET is about 48%, and you can see the packaging, fibers, and PTA. We are doing the Rotterdam expansion, which will add another 30 million euros of EBITDA. In next June, it should starting, and it's a captive consumption. It is only for replacing the purchased PTA. So Europe has also grown in terms of the product diversification as well as the upstream integration. Asia, as I was just telling, that Asia is an exciting story. We went into India. The acquisition was done on 30th September. So this is a 50-50 joint venture. You won't see this in EBITDA. We have an option to consolidate it and take a, if we opt to do it. And this market will continue to grow rapidly. A 0.81 million ton market is expected to be about 4.6 million tons, which is still today's China consumption. So in 10 years, it will catch up China's consumption. So with India is much behind. The per capita consumption is only 0.7 kilos and 3.5 kilos in China. So it, and in states is 7 kilo per capita. So there's a lot of growth potential, and this is a consolidation story in India. The largest producer is Reliance Industries, and today with Dhanshri creating this joint venture, we become second largest, which is about 700,000 tons capacity, and there's only one small player with JBF. So it's also a consolidation story, growth story, which is in India, and you will see those bottom lines translating from fourth quarter onwards. This grew the business from 0.6 to 3.3, and as you can see, 1.5 to 8.9. And as I was saying, that return on capital employed went into the double digit because of our HVA strategy, our higher capacity utilization, our operation excellence. So Asia has started delivering the results in terms of return on capital employed. The two important projects, I think we talked about this. The Rotterdam expansion will be ready by June. It will lower our costs because there's a lot of heat integration. And presently, this PTA which we are buying from Korea will get replaced by own manufactured PTA. So no marketing risk, no technological risk, and this will be one of the most cost competitive plant in Europe because of the latest state-of-art technology and also the scale, which is about 700,000 tons. This will increase our integration level from 51% to 75%. And actually, if you look at the virtual integration, it will be 100%. Virtual integration means that in Poland, we have next door the PTA producer, which is PKN. So our integration level will become 100% in Europe, and that makes us very strong. There is a move by PTA producers to put anti-dumping duties on Korea on PTA, and if that happens, then further margins improves in European PTA business. So that's exciting. Gas cracker, which is 400,000 tons. The beauty of this cracker is that this is a restart of an old cracker. The capital cost will be only $1,000 per ton, while the other new crackers, which is 1.5 million tons getting built in North America, is $2,500 per ton. And our estimated EBITDA on this business is 110 to 120 million. Again, this is what purchase ethylene which we are doing. It will be replaced by own manufactured ethylene. So there is a migration of margin from MEG to ethane to ethylene. So once we have this, we capture the whole value chain from ethane to MEG. Also, as you know that we have a purified ethylene oxide business in America, which we have 42% market share, and that continues to grow. As you know, the purified EO cannot be transported. It is like a bomb, you know, that you are moving, then so it is a very surface business. We have many customers next door. So this gas cracker and PT expansion will improve the profitability significantly. Fibers is a very important business which we have developed in terms of HVA business. In last 12 months, our growth in volume has been 1.29 to 1.38 billion. But look, the EBITDA growth has improved from 6 to 7.54, which is higher margins. And how the higher margins have come in is because of high value-added business, migration of Rayong facility to more value-added product line, and that has translated into the EBITDA of 6 billion to 7.54 million. If you look at only this quarter, it improved from 1.69 billion to 1.8 billion, from third quarter 15 to third quarter 16, which is basically higher volumes. So fiber driven by acquisitions, high value added, and improved operating rate in Indonesia has delivered superior results. This is a particular example of transformation of one asset, which is Rayong. As you know, in Thailand is no more that cost competitive. Thai baht continues to hold on in spite of all the turmoils in the world, while the other currencies have weakened significantly. Mexican peso weakened to 20, which helps us because in Mexico we have a production facility, and even Turkish lira has become 3.2. So this Rayong facility was transformed from necessities to specialty. So we transferred the hygiene fiber, the Bico business here, because our customers were looking for this facility in this part of the world. And we dropped from 87% necessity to 46%, and our hygiene fiber has gone up to 21%, and non-woven fibers is 32%. So today in Rayong, the commodities are less than specialties. Now what does it mean? We did invest money in this, but it translated into EBITDA per ton from $61 to $99 per ton. And this transformation is continuing so that we can produce more value-added products here. These are the two large projects which we are doing. We acquired from Performance Fiber a tire cord business, which is very cost competitive. We're adding up a new line, 17,000 tons, and as expect to add in first quarter 2018. Growing demand, lower fuel oil prices, strong demand of cars, strong demand of tires, and so we are very confident that this will deliver very good results. Similarly, we put a state-of-art plant in Indonesia. It took some time to stabilize it, but as you can see now, we are moved the operating rates. Now we are converting one of the chip line into a value-added line, which is fiber. Now this expansion of 79,000 tons or 220 tons per day will be operational by second quarter 18. So we are basically converting chips to fiber, and which is much value-added products in Indonesia. Indonesian market domestic is quite exciting with the growth in Indonesia, and this is and the cost curve of this facility is much lower than China, because we have our own power plant. The Indonesian currency is weak, 13,000, and you sell domestically. So these two projects are quite exciting in fiber, and you saw some in PET and feedstock business. The innovation remains at the heart of business. Today the world is keep changing. You see the iPhone changing. You see many applications. You can see polyester looks like cotton. So there's a lot of innovation in the fibers. So similarly in the automobiles, there is a lot of areas where we keep innovating, and these R&D centers keep working with our business partners to develop, whether it is Procter & Gamble, whether it is Kimberly-Clark, or whether any tire companies, that how we can improve the performance of those tires, and this is embedded into the system where we keep developing the HVA product lines. And as you can see, the wind blades or many applications are there in the fiber which we keep developing. So that's the end of the last slide. We are on track for 2018 vision which we had built. You saw the value addition, how it is growing. We have converted into double-digit EBITDA margin already, and we'll continue to improve on that. There is a strong operating cash flows with the EBITDA We are talking of $3 billion. You know that 820 is already annualized based on today, and we talked about the cracker. Our return on capital employed has already improved, and we are targeting to further increase over 15%, and that should translate into better earning EPS growth of 4 times. So thank you very much. Now we can take your questions. Thank you.
Mr. Agrawal. If anybody got a question, please don't hesitate to ask. There are no questions from online at the moment. Doesn't seem to be many. Seems to be explained it very well.
Seems to be.
We've still got another 10 minutes. I mean, if you have any questions, we'll be happy to take them. And if there's anybody online listening in, please don't hesitate to type in a question. Please go ahead. Yes. Yes, yes. Oh, is there a microphone here?
Most Honorable Executive Director Mr. D.K. Agrawal, Mr. Jalan, Mr. Richard, congratulations for keeping highest rank among set-listed company on transparency from Transparency International and consistently maintaining 5-star from IOD. You are having presence in 21 nations across the globe. Congratulations. I have one suggestion and question. SCT has put 51 companies on sustainability index. You are inclusive, but in case of Dow Jones Sustainability Index, only 14 companies. We need that your company is eligible and worth and should be included in future. What are the steps you are taking? Second question is regarding Indian venture. You are keeping 50% JV on Dhansiri. Can you enhance further so that your management and profitability will be adding more to IVL? Thank you.
So on Dow Jones Sustainability Index is at the drive of our IVL. We are already applying. You know, it's emerging markets, chemical sector. They only, you know, it's by invitation, and it's a very selective process. You're right that this will add up to the value. We are quite confident. We actually got a very improved results this year, and we hope our team is working very hard that we get listed on Dow Jones Sustainability Index. Sustainability is a key thing, not only from climate point of view, but from the sustainability of the organization as such. And as you know, the IVL has invested in recycling. We're investing in creating the management talent across the world. Our customer relationship is so strong because we do the direct selling. So this all is a very important ingredient to make a successful company. And our board is continuously focused on it. Our group CEO, Mr. Lohia, is also driving the entire thing. On Dhansiri, you said 50-50 joint venture. The management is with us. There are synergy benefits of nearly $3 million, which we are looking at it. As you know, Dhansiri has been a very old player in PET. And why did they create a joint venture? It's because to a win-win formula. We bought a plant in Panipat in North India, and now with the Haldia is 700,000 tons, and second to Reliance. So you will certainly see those results getting into the earning per share because it will be an equity accounting. India is going to be a very growth market, and will remain. We see a very exciting opportunities in terms of further growing this business in upstream way or further downstream way. You know, so this is a first move to India. You know, we being Indians, we went first time to India.
I have one high admiration to you based on Money and Banking magazine for May 2016, based on the data as on 31st December 2015. You are ranked 8th among all 300 top companies of the set in revenue, while your total rank overall is 80th. I am suggesting that this is the best thing, best strength your company is possessing, revenue on 8th ranking. If you will get further up, your company will be ranked in Fortune 500 or Fortune 100 because they are ranking based on revenue. Example is PTT. supporting and complementing to this suggestion, I suggest that you should have one trading company in here or in Singapore where there is more incentives, because revenue will be more added and your ranking will be upwards inclusive to the Fortune 500. Thank you very much.
Suggestion noted. Thank you. Thanks for suggestion. Yeah.
Okay, so we have one question from online. What type of situation will affect your company's performance forecast?
I think the world economic growth is a key driver. We are seeing many exciting things happening around the world. We don't see anything which is negative happening right now which can affect our performance. As we said, that PTA margins are likely to improve. Our asset utilization is strong. We are PET, there is no danger. I mean, right now we don't see any substitute of PET in the world. If some substitute comes in, so nothing is in the horizon. The technological changes are not happening. We have actually improved the technological curve of many assets. We continue to retrofit them. Of course, we can't achieve the latest state-of-art technology, but then it's a trade-off between capital cost and operating cost. So we acquire the assets at 30% of the replacement cost with a slight penalty in the operating. So operation excellence and all these things, I don't see anything which can affect situation. Thailand, if the Thai currency weakens, is also beneficial for us because it translates into better earning. The US elections, okay, if you see the US GDP growth improves. India recently, the 500 rupees or 1,000 rupees note were no more a legal tender. So a lot of black money, which is parallel economy, which was running in India, and if it gets added into the Indian economic growth, they are talking of a robust GDP growth in India, and that will help in that part of the world. Indonesia, nothing. Turkey, yes, there are, of course, there were incidents, but having a global operations hedged all over the world, I don't see anything which will affect our performance so far. It doesn't look like anything. But of course, we keep our fingers all the time crossed. Yeah.
I want to just add one point on Turkey, because if you note in the second quarter, we have proactively already taken the accounting impairment of one of the assets. So we strategically take steps proactively.
So if we are having a not asset which is performing, we do take steps. So we acquired one Turkish asset at very low value, which was high cost, and we acquired another asset from Polyplex. So we took impairment in the second quarter for those assets, and we will mothball. So we do take quick action if there is a not to killing the losses. Yeah.
There's another question online which is quite interesting. On the last slide, we say that the EPS will go up 4 times by 2018, which is equal to about 4.8 baht a share. Does this EPS include all the warrants as well?
I don't think it includes warrant exercise. So just warrants are, as you know, at 36 baht option. So this is EPS is pre-dilution. Am I right? Yeah. So that's the target pre-dilution. So of course that will come with the EBITDA growth as we are forecasting. So
yeah, there's actually one set of warrants that come to an end in 2017.
So if the warrants get exercised, the earning per share will drop.
Yeah.
But you can see that a lot of cash comes in, you deleverage the company. Company has a lot of then what you can go for more acquisitions.
Yeah. So any other questions? Oh, go ahead.
I'm having one question and admiration to you. Regarding your ROE and ROE, you are one of the best company having ROE higher than ROE, as observed from Money and Banking magazine for May. I'm referring to slide 15, and I would like to suggest that can you use one good ratio income bearing assets, how much it should be increasing, and this way you can continue to have elevating ROA in future. Thank you.
Okay, that's a good one.
Thank you.
Yeah. So there's another question online. As you've got investments in so many countries, do you face any difficulties in taking this money back to pay a dividend to shareholders?
Absolutely not. We have investment all around the world. There are no restrictions bring cash. We keep paying the dividends. Even Indian joint venture, I'm flying this weekend, and we're saying that okay, we'll start paying dividend from the first quarter of the year. So except one country, which is right now Nigeria. So Nigerian currency, I mean, we made a lot of money in Nigeria, just a lot of money in the sense we expected to make $6 million EBITDA. We ended up with $15 million EBITDA in Nigeria because Nigeria currency has weakened. So there are some times such situations happens, but then your currency weakens and you take out the money. But this is very small of a total IVL picture. The IVL, as you know, 46% EBITDA is from North America. And North America, there's free money. Europe, free money. China, no problems to take out the money. So no country has restriction. And our head office keeps working on this to pull the dividend from the companies. It makes tax efficient. You leave the debt on the company, you get tax deduction for that.
And just to add, also whatever earnings we make in the overseas companies, sometime we use that money for the growth. So like when we are expanding in North America or we are expanding in Europe, so we can use that fund for the further growth as well. So we can bring it to IVL and we can use it for growth as well.
But the dividend policy still remains not less than 30% of net profit. So
that's on the holding company.
Yes, yes.
And subsidiaries, of course, you pull the cash much faster.
Question on slide 16 on Abu Dhabi. Abu Dhabi is becoming more friendly, like most favored nation to India, because Prime Minister has proposed as a guest of honor for the coming 26th January in India, the Abu Dhabi King. You can also review your exit from Abu Dhabi in 2015 in aromatic complex, maybe another opportunity, because that country will become more friendlier to Asia, including India.
Yeah. Okay.
Yeah, we keep looking at different opportunities. This we took out decision because crude oil was dropping. These countries, Middle Eastern countries, were not having sufficient money, and we did not find the project very attractive in those circumstances. So we pulled back, and then we recovered our contribution of equity.
So, any more questions? If you prefer to ask a question outside the room, that's okay as well. So we're almost finished. 2 minutes to go. I can't see anything else from online. Nope. Okay. If there's no more questions,
I may add one question and admiration regarding market cap. You are 26th ranking out of 300 top companies of that listing. I must admire to Mr. Alok Lohia and Mr. S.P. Lohia that you have put the venture, Indian venture, later on out of all 18 or 20 joint ventures, but you are among the highest market cap companies from India, joint venture. High admiration to your most able management.
Thank you.
That's good.
Thank you very much.
Okay.
ขอบคุณครับ สวัสดีครับ
สวัสดีครับ